Hello everyone, very good morning, good afternoon, and good evening to all of you to this very late session of the JForex indicators explained, in which we will be looking at a interesting pattern formation of the Harami cross. In last session, I explained to you the pattern named Harami. Now we will be considering this a derivative, you can say, of the same Harami pattern. There is a pattern which can be utilized to look for the reversal in the trend. So there are some conditions which need to be satisfied by the price action to be considered for the appropriate Harami cross formation. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. Today is the Friday's trading session. So after a couple of hours, all of us will be signing off out of the market and over to the weekend. So till Monday, all the money which we have made in the week can be put to use or good use over the weekend. Now if we consider the euro USD's price formation, here you can notice that if we see these price moves, they tend to be in a formation where the price continues to go in a same direction for some time. Then some reversal happen. Then again the price changes course and till next reversal comes again continues in the same course. But sometimes it can change its course frequently as well. So we need to be aware of these changes and we need to be in a position to go with the price fluctuations as closely as possible. So for that kind of scenario, we can take into consideration this Harami cross pattern, which is a pattern for trend reversal. So if we have seen any significant move in any direction, if it is a bullish move so far or if it is a bearish move so far, you have to devise a mechanism to look for the signs of reversal. So whenever the trend change comes, you are ready to exploit. So that's where this formation can be relied upon. That's where you can try to utilize this formation if the price action does unfold in a anticipated way. So let me show you where this formation is listed. Just below the Harami pattern lies this Harami cross pattern. Now you don't really have to take all that trouble. I just wanted to be sure that you know where this formation lies, and now we can take this shortcut, the quick route Harami cross pattern. Now I have added it to the chart. Let us see when it formed very recently. Oh, so it formed recently on 6th of January and it indicated a reversal on the bullish side. And what a reversal it was, that this reversal has added quite significant gains. If any of you were to utilize this formation that day, you would have made damn amount of money, a lot of money. And on the prior day also we had this Harami cross, the bullish Harami cross formation, and there also it indicated reversal and price did rise for a couple of hours, and not much in terms of the pip, but still good enough. Let us now look for some more examples. There is also a formation of the bullish Harami cross, as this prior trend price moves were bearish and then this Harami formation took place. So we have to place it in context of the recent price action, how it has been placed in midst of this formation. In this case, it will be bearish Harami cross formation. The price doesn't really reverse this time around and it continues to rise for next couple of hours. So all these formations are giving you the signs that this is a pattern recognition technique which will have to be used in a judicious way, because not all the formations are going to bring you money, and all that you can do is try to optimize the trades. So when you make money, you should be making good amount of money, and when you lose money, you shouldn't be losing too much money. So that is the whole takeaway, whole requirement of being successful in the market. Now let us look at its requirements, how this pattern recognition works. So for any bullish Harami cross formation, we need the price to have declined significantly in recent times, and the very last candle, not last, the second last candle, because this formation is made up of two candles. So let's say first candle needs to have shown significant decline. Its body should be large enough with this price, close price being below the open price, and that large body should be then containing the closing and opening price of the next candle, which should be a doji candle. And if you remember, I had explained to you what the doji candle is. And if you don't, then let me again explain to you. The doji candle is when we have the closing and the opening price which are nearly the same for that particular candle, and this body should be really small, and it should be contained within the larger body of the first candle. So we need the price trend to have to have been negative for last couple of hours if we are dealing on the hourly candle frame. And then after a couple of candles, when we see this large candle with this closing value significantly lower than the opening price, being followed by a doji candle where the opening and the closing price are nearly the same, that is the formation of a bullish Rami cross. And it is a cross which indicates the possible trend reversal. Now, this trend reversal might take place, might not take place, because you can't really be sure all the time. So, in that scenario, then you will have to use additional filtering mechanisms, like how things unfold in the subsequent candle. You can also add that as a requirement to your trading system. So the once basic formation of the Harami cross is in place, you will have to then decide whether to overlook the particular Harami cross formation or to go for a trade. So that you will have to judge depending on the prior price action, how much things have moved from the start of the prior trend, and then lot more factors like additional tools, additional indicators can also be applied. Now let's take a look at the example of a bearish Harami cross. There is also a formation of bullish Harami cross, and for bearish Harami cross we will have to go back in time. Okay, so this is the representation of the bearish Harami cross. In this instance, it seems to have failed, as we see that in next candle also price continues to rise. So I had said to you that not all the pattern formations are going to end up profitably. So in this instance, you see that this particular formation of the bearish Harami cross would have resulted in loss if you were to go for a trade. Now the requirement is that in the lead up to this formation, there should have been significant rise, and then the formation's first candle should have a large body. Its closing value should be significantly higher compared to the opening price, and for that you will have to take into consideration the average volatility prevailing over recent candles, and using that you can judge how large this candle body should be of the first candle. Then that candle should be followed by a doji candle where the closing and the opening price of the candle are nearly the same, and this doji candle's closing and opening price, the small body of the candle, is being contained within this larger body of the first candle. So this is a two candle formation, and this second candle's body should be small. It should be a doji candle, and it should be contained within the larger body of the first candle, so that is the requirement. And then you have to use it as a mechanism for the price reversal. So here the trend was bullish, and then in this formation we are getting a bearish signal, but in this instance it didn't really end up in profit. Actually, if you had even taken this trade, it would have ended up in loss as the price continued to rise significantly higher. So in this instance, this formation failed. So that gives us one more lesson, that we will have to be cautious. We can't really go overboard, because just is the case with any indicator, this formation is also prone to fail sometimes. All we can do is try to optimize the formation, so that when we lose money, we should be losing little money, small amount of money, and if we happen to be right, we should be making good amount of money. So let us look at other instances of the bearish Harami cross. In this instance also, it seems to have failed as price continued to rise. So maybe you can add additional filtering mechanisms also, like your own other indicators setup, or you can watch out for how price action evolves for next couple of candles. And if the price is only being contained within this reversal mechanism, the price level indicated by the reversal mechanism of this Harami cross pattern, then you can go for a trade, or you can simply sit on the sidelines and watch things unfold. In this case, we have this bullish Harami cross, and then price continued to rise immediately for next couple of candles, then reversed again, then rose again. Eventually, it traded sideways, not much of a move. In this case, the price continued to decline. So I think if you simply add this filtering mechanism of paying attention to the price action even after this Harami cross formation, you can make a better judgment, and using that, you can go for a reversing mechanism. In this case, we are getting this bullish Harami cross, and it did provide a large amount of profit. So the thing is, we have to be quite aware of the possibility that not all these Harami cross formations are going to end up in profit. Some of them are going to end up in profit, some of them are going to end up in loss. In this instance, we had these two instances of the bullish Harami cross. In first case, there would have been little amount of profit, or if you were not to book it, you would have ended up in loss. Then again comes the second Harami cross formation. This time around, there is significant rise, and all these losses, or even multiple times of what you had lost, would have been recovered in this second successful instance. So that's my explanation of the Harami cross formation. Let us see what we can do in terms of its editing. There is nothing to do in terms of its input value, because there is a formation which is made up of two candlesticks, so there is not much we can do about it. All we can do is change the candle period. Output, you can go for a different color combination if you are not really happy with this, so you get this customization option. Bracketing, or you can go for full coloring of the candle. These two options are there. If you want this formation to look less prominent on the chart, you can reduce that as well. Then comes the advanced editing option, recalculate on new candle only, so you can go for that. If you want to highlight the time period zone, that can also be done, so you get this highlighting of these two candle formation. Calculate from custom data. As I said earlier also, we can't really customize the calculation, that part is fixed. Then show indicator on all the periods. Suppose if you want this indicator to be available on all the candle periods, whenever you change the chart, you can have it. Or if suppose if you are using different indicators on different time frames, then if you don't really want this particular pattern to be recognized on the chart, then you can go for the change of settings and you can opt in for a particular candle period. Only on that particular candle period it will be available. Now that I have opted for hourly, only on hourly it will be visible, but here it has vanished from where we had picked up that editing toolbox. Now again I am back on hourly candle period, so we will get this formation back in place. So that's how this system works. So you are able to have multiple data points in place, and that also doesn't make the chart look too cluttered. So that is the whole benefit of using these formation on this platform of JForex 4. So that's all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback and I will be more than happy to take the discussion forward. So thank you all for joining in. Have a fabulous time ahead. Have a fabulous Friday and the weekend. See you on Monday. Goodbye.